because it's an important point, talking about cash flow and the like. But I guess before we jump into that, I want to thank you first of all for joining us again today. As I mentioned before, we're going to try to run these twice a week as we get more information. And of course, yesterday we had more information yet again about employers and support payments around that. Same system seems to evolve that we've learned very much. Michael and I were chatting about this earlier this morning. There's a process where we get a rumour, which was Saturday night / Sunday, and we're alluding to something coming. Monday we get a press announcement. And now this week we scramble for some detail, and there'll be a parliament sitting, looks like a special parliament sitting coming up where there'll actually be legislation passed through. So when that's the case, fantastic, but until that time, what we're looking at, I guess, is what's going to work best for us as clients, and what's the best way for us to advise our clients. Challenge with advising you on the announcements yesterday, right now, is that there is no legislation. There's some fact sheets, but there's never great detail. We've already learned from the first 2 rounds of stimulus, detail is where we need to pay attention to and give additional knowledge around that. So for those who are thinking about, okay, what's the next process? What should we do here? Let's just have a look through that and work our way together. We thought though today, what we might start off with just a little bit of sharing our community. And obviously, coronavirus, COVID-19, whichever school you've gone to, it's challenging us at a social level as much as a technical and financial level. And just with the chat box there, we thought we'd ask if people would maybe share something you did on the weekend or over the last week that you perhaps wouldn't have done if it weren't for the self-isolation and the like going on. I know, Michael, you had a big weekend, didn't you?
Yes. I actually had a weekend where I did nothing, and I don't think I've done that for a very long time.
Yeah,
mainly because I was sick, but that's fine. Yeah, that was probably just talking with the family.
Yeah, and when they've always come through is, so Linda's exercised more with her kids. We thought I'd share these ideas just so that if you want thinking as what can I do with this time, there might be some ideas out there. What's Rod done? He's played Fidscale, which is some random game where you chuck a log of wood at other logs of wood. I hope the wood didn't chuck Rod back at you, Rod. That's very Rod for you. So thank you. I'll share a quick one that I did, which was supposed to be Josh's 6th birthday party on the weekend. Obviously couldn't happen, so here we are in the backyard Saturday night, him and I camping. So just for something for his birthday. So little things we're all doing differently. Share them around. We want to share, because as much as we're going to talk about some negatives and some challenges and the like, we want to keep ourselves upbeat and looking for positives or looking for new experiences through this time. Steve Williams did homework on the ASX for the first time. Good boy, Steve. Well done. And Damien Chade started some landscaping in the backyard. Jackie is looking forward to finding some routine in her life, which is great. And Sue Buckman says she played board games on Saturday night. It was great to be together. So fantastic. Really good experiences. We're all having fun together. Nick Walsh cleaned up his study. Probably a good idea, Nick. Probably more to go. So let's jump into what we're doing here, which is the deferral of the loan payments and what it actually means, because we've seen there publicly announcements that you can defer your loan payments, and we actually think it's a really, really good strategy for a number of people as part of this ongoing business continuity plan, which we might even touch on later on in the session here today. But we also want to make sure that you're making an informed decision, because it's too easy to say, yep, stop the payments, that solves the problem. Let's have a look at what it actually means to you from a long-term and a short-term point of view. So I might go to Michael here, because he'll be able to run us through what the rules are around this.
Yes, it's quite interesting when you look at these rules that if we want to be talking to our banks about deferring, unfortunately, the banks will still charge us interest. There's no getting out of it. On top of that, though, they'll actually add interest to the balance. In other words, it's a technical term, but they're capitalising the interest. So you'll be charged interest on interest. And the third point there, well, at this stage, I think the banks will probably look at increasing the amount of the repayments so that the loan is basically the same as what you entered into, as opposed to extending the loan itself, the loan period. That's our take on it at the moment. Each bank could be different, but let's not get away from the fact you're still going to pay the interest.
Yeah, it's not a change to your bank contract. Is it a loan contract? It's
No.
a change to the repayment schedule on that contract, which still ceases whenever you agree to cease it.
Correct. To do that, you would need to go through the process of changing the original contract, and it might not be something you want to do at this stage if you start having to need to provide financials and things like that.
So let's talk about the short term versus long term. And short term right now, we're saying, and I think this is globally agreed, cash is king. Anything else, Michael, other than cash?
No, more so than ever. Cash is king, whether it be when you're talking finance or in your business. It's no point in business. It's no point having income sitting in someone else's bank account. It's got to be in yours. No different when it's talking about borrowing. It's all about the cash.
Yeah, but what is on your side here now? We've called it global empathy and support, and basically you keep seeing these hashtags in this together and the like, because we are all in this together. So there is a genuine empathy from the banks, and I can share the experience that on behalf of the client, I actually made some calls on the weekend. We do a lot of work for this client, so part of our role is actually to support their business management. And I rang the banks, and we got the extensions on the loan. The bank, for a start, it was an interesting process, but by the end of it, it was actually very empathetic. You just had to jump through a few hurdles on the way through. And the last one is, it's actually a term that an administrator liquidator shared with us, wasn't it, last week? Mothballing.
Yes, mothballing. I think it's an adaptation of the term that Scott Morrison is throwing around, but hibernation and things like that. But mothballing is basically just protecting your business, protecting your assets, and in terms of capital, making sure that the things that you need to come out the other side, whether they be physical assets or your team, your contacts, your clients, mothballing, wrapping your business up in cotton wool to make sure that we're ready to go on the other side.
Yeah, and so we're not saying, and the advice is not to don't spend money, but spend money in the services, the products, the people who are going to help you see you through the next 6 to 12 months. That's critical now. For us, part of that's been investing in technology. We've had to pay more for some technology, but that's actually allowed us to connect with each other. So the long term, though, against that is it's all well good for short term to say we're not going to pay, we're going to stop the payments. But what we really want to have a look through is everyone. Sorry, I just got a message here from Melissa to say, has everyone muted their audio? Having some problems there, Melissa. If you are just flicking through to me, but
Haven't, please do.
Yes, that'd be great. Yes, good point. Thank you. The critical moments and the week-to-week forecasts. What we're talking about here is it's all well good to stop the payments now, but let's understand the longer term. Let's understand about the continuity of the business. And maybe we're talking to these three things here, Michael, for the long term.
Yeah, certainly. Most forecasts are done on a month to month, 2 or 3, quarter by quarter, year by year basis. We've got to break that down now to week by week, because that's how we as businesses now got to survive. Really important, and it's not easy to do, but it's really critically important that you do that. And the critical moments, because a lot of this funding is not going to kick in until 28 April, 1st of May, etc. So this next 4, 5, 6 weeks, we need to know everything that's coming in and out of our business. And planning, I mean, more so than ever, we if anyone has ever listened to us before, we're saying that, you wouldn't go driving your car down the highway with a blindfold on. If you don't have this cash flow, you're driving your business in the same way. And now more than ever, you need to have a really good handle on what's coming in and out on let's get down a daily basis.
Yeah, absolutely.
I'll leave you to key points of resistance here, Tim.
That's right. Just a key point of resistance is there's going to be moments in your business where it is a crunch moment, and so it's important to know is 2 months, 3 months, 3 weeks, 5 weeks. What are the key incidents, key moments where I'm going to have to actually pivot and change? Because pivot and change is going to exist for us a lot over the next 6 months. So what are those key points? The cash flow actually will spell it out, and planning will spell it out for you really quickly.
Yep.
I've just got a question here from Nick, who's actually asked a really good question, and we won't actually probably answer this today, Nick, directly, but it's a critical one. He's asked about when will banks start looking more closely at clients with little equity, because given the fact that potential values of commercial property and the like is going to take a hit over this period of time, when will banks be looking at clients with little equity and saying, how are we going to deal with those clients? So we'll talk about this more down the track, Nick, but the short answer to that is that will be happen, absolutely. And hence why they've got the government providing some guarantees on some loans, but there will be a full lending process you'll have to go through if you want to get any additional funding or the like. With the existing loans, if you meet your commitments, then the bank, generally speaking, will be okay with that. They'll be their process. But it's all part of this business continuity plan and how am I keeping my business positive going forward. Is that fair, reckon, Michael? Do you reckon?
Yeah, absolutely. This is a really dynamic area, I suppose. It's a moving target. The banks, they're still not quite sure on how to approach this, but I agree with you, Tim. I think as long as you're making your repayments. Now, I think in answer to Nick's question too, if we go and ask for a deferral, the banks are going to do a bit of a due diligence, I would have thought, and said, okay, so why are we asking for a deferral? Is it going to be short-term, long-term? And that's when I think, Nick, they'll start looking at their security, how much equity you do have, things like that. But in the interim, I think they'll be just concerned about getting the payments. And Tim, just on that, if you decide, and we'll touch on this probably a bit more on Thursday, if you decide to try and refinance, it really is, and even this is when the government is going to guarantee 50% of the loan. It's still the bank's lending criteria. It's whether you get that loan if you're trying to refinance, we purely down to the bank's lending criteria and your ability to repay.
Yeah, absolutely. Michael just touched there on Thursday. Before I get into the work example, I might just segue into that. On Thursday morning at 9 o'clock, you might want to share this around. We're going to be running a little session like this on a business continuity plan and how you put it together. It's something we've done for ourselves, and there's actually potentially some opportunities there to be able to help clients through that. And it's a bit more detailed than anything we've been doing to date. So if you don't know what a business continuity plan is, basically, in simple terms, it's keeping the business going whilst this is happening. While this is happening, but while any adverse event is happening. And we've got some guides. We've also got we've got a lot of questions around how we're going to deal with that. Just please jump on board. We've got templates, all that sort of stuff we'll go through. I also just confirm at time. Linda just mentioned to me it might be a 9:30 start, so we'll just confirm. But you'll get the registrations. If you're on a subscription list, please jump in on that and share that one around because we think that's probably we're working harder on that one probably than on any other session because there's a lot more detail in that, but it really is critical to keeping your business going. So I hope to see there Thursday, and please invite people along to that as well. The term business continuity plan can sometimes scare, but really is a step-by-step strategy on how to get the business going through this period of time. Let's work through this work example, and we've actually put some numbers together, not to say don't defer your payments. That is absolutely not what we're saying here, because that will be part of your plan. But what we're saying here is understand the decision you're making in the business. So the example we've used here is the loan of $500,000, and everyone will have their own numbers, and we can run those here. And what I will also throw up there is that if the numbers are out by $5 or $10, that's what they are. We've used some online calculators to produce this. And let's say you take the $500,000 loan out over 25 years, paying off principal and interest, and your rate was 3.33% at the moment, which of itself is frightening to see on a bit of paper. The monthly repayment would be $2,458. So let's assume you're 5 years into the loan, and the balance owing therefore would be about $430,000. And you say, ring the bank and put payments on hold for 6 months. That means that in 6 months' time, so a week here since on the 31st of March, roll forward to the 30th of September, the loan balance, so just be the loan balance itself, would be after 6 months would be $437,283. And with that shortening of the repayment period, the new repayments will actually be $2,561 per month. So there are some adjustments you have to factor in to your cash flow on that case. And then if we look at the next slide there, so therefore we'll say $103 extra a month, give or take, for 19 and a half years. That's because you've had 20 years to go, you've got 19 and a half to go. Over that period of time, you paid $24,102. What you saved on the 6 months you didn't pay right now was $14,748. So if you let the loan just run out for the full period of time and you don't make any extra payments or the like or anything like that, the difference, and we've specifically used a term here, the difference is $9,354 between the two. We're not saying it's a cost. For some it might be a cost, for some it could be an investment. But fair summary of all that,
in the long-term viability of their business. Yep.
Absolutely. So is $9,354 a great investment in your business? Don't have to see it as a cost, but for some, it may be a cost. So just make sure that you're making a decision that works for you and your business.
Because going back, Tim, it's all about preserving capital, mothballing your business. And if that's what it costs to do that and keep you trading out the other side or keeping your home, then you're right, Tim, it's not a cost, it's an investment. But we're very big on just making sure that people are aware of the numbers when they go to make those decisions.
Absolutely. Let's not think it's a free hit. It's an informed decision you're making as a business leader.
Tim, might be an opportune time just to throw in a couple of examples of what I've been hearing when people have been approaching their banks. There's the top four, there's the big four, then there's some second, third, and even fourth tier lenders. And then you've got your lenders such as Prosper, who are very short term and paying a little bit higher interest rate. What I've heard with people who've approached Prosper to get some leniency, basically, and I might be getting this not 100% right, I'm hearing, look, no, we're not about to let you not pay it, but what we will do, give you, say 4 weeks to go and refinance if you can. Otherwise, business as usual for us. I personally had experience where I've got a loan from many years ago with my brother and my sister on an investment property, which is with probably a third, or it's like a credit union. And the best that I could do was they would drop repayments by 50% for 2 months. So it's not a lay down misere that you'll just walk up and get 6 months. I think you'll have a better chance with the bigger banks because there's a lot more scrutiny on them. But certainly your lower tier lenders are it's probably dragging the chain. I'll put it nicely, dragging the chain a little bit.
Mm. So, and that's a conversation becomes critical. You've got to talk to people. There's all sorts of stuff happening around. The other thing is to be really aware of short-term lenders who may actually see this as an opportunity to spike you in for a 15, 20% interest rate in the current environment. Please don't fall for that trap either. That's not just credit cards, that can be your short-term lenders also. So we're going to leave that there. We promise to keep these things nice and short. These are just all our contact details, of course, again. We will be running a session on Thursday, though, about business continuity. And we really encourage you to jump on board for that, because it's going to be, as I say, it is going to be different. We've got some templates, some guides. We'll have some offering of services at the end, because we think this is probably really important at this point in time, as to how we get through this period. The announcement made yesterday will be a critical piece of overall where we're going from that area. And we're really hoping to be all part of this together. So thank you so much for being together. If you have any questions or like after this session, don't be afraid to hit up Michael or I for emails. We're looking forward to more emails, and it'll definitely be of value. So thank you very much. Appreciate your time today, and thank you again, Michael. I know you've got a bit of a
Thanks, everyone. See you later.
Cold, but thank you. Okay, see ya.